Is cellular agriculture and lab-grown meat just the next overhyped trend, or is it here to stay as part of our grocery cart for the long term? Cult Food Science CEO Mitchell Scott is here to tell us why there is a strong future for cellular agriculture and what Cult is doing to capitalize and help grow this opportunity. I'm Martin Gago with Market Radius Research. Happy Independence Day. It's Thursday, July the 4th. Please remember this is neither a recommendation or investment advice. We're here to learn about the company. Mitchell, thank you very much for joining us. How are things going?
Things are going great, Martin. Thank you so much for having me. Pleased to be on.
All right, excellent. You've got your deck here. Let's have you walk us through the Cult Food story, and then we'll ask a bunch of questions and dig into issues as you go along here. Thanks.
Sounds great. Yeah, feel free to jump in anytime with any questions. I'll give you guys a quick overview of Cult, and we'll go from there. So at Cult, we are investing in and building some of the first companies in this really exciting new space called cellular agriculture. As part of cellular agriculture, there's all these sorts of enabling technologies like cultivated or lab-grown meat, precision fermented dairy. And the idea is really that there's all these foods that we love: meat, cheese, dairy, honey, chocolate, cocoa. And they're all being made in ways that, aren't great for environment, aren't great for the animals, and aren't necessarily great for our health. So the idea behind these technologies is let's figure out a new way to produce these products that's better for the environment and everyone involved. So we're currently the only publicly traded company in Canada focused on this space, one of 3 companies, publicly traded companies worldwide focused on this space.
Mitchell, I'm just thinking here. There's the Beyond Meats of the world, which have been out for a while, and then there's cellular agriculture and that. Can you just highlight the difference between the one versus what you're doing and what cellular agriculture is?
Yeah, absolutely. So plant-based meat or plant-based alternatives, the idea is we're going to make something similar out of, beans, veggies, other types of ingredients. Kind of looks the same, kind of tastes the same. But with cellular agriculture, we're recreating the exact same product. So it looks the same, it tastes the same, it's identical on a cellular level. It is the exact same product. It's just made in this new way.
Okay, so it's done in crudely a factory or in test tubes and fermentation devices and all sorts of, I guess
Yeah,
there'll be lots of different routes to it, and a combination of all of those things to create these
yeah.
cells through different means.
Yeah, so to very, very simplify, the kind of idea behind it or the technology, for meat, for example, you could take a chicken feather or a small biopsy from an animal. You put it in this large bioreactor, kind of similar to the equipment they use for brewing beer. You feed it these nutrients, and over the period of a couple of weeks, you have the piece of meat that you want to eat without factory farming, without raising the animal. You're just getting this meat that you want to eat. And it delivers, it looks the same, it tastes the same. It really is the same piece of meat, but it's made in, a bioreactor.
All right, thank you. That's great sort of setup for the rest of the presentation.
Yeah, absolutely. And maybe to start with, I guess, why should we be working on this? Why should we be doing solutions? Isn't our current system working? Well, I think it's not. So, in the next 20 to 30 years, global meat demand is set to double. Currently, a third of the usable land on our world is used for animal agriculture. So very quickly, we're going to run out of space to create, all these products that we need. And we need a better way to start producing these products. In addition to that, there's a lot of not so great practices out there involved with, animal agriculture. Everyone loves this idea of these happy cows out in these fields and, living their best lives and then ending up on our dinner plates. Unfortunately, the reality is quite different. 95% plus of, meat in North America is factory farmed. And it's destroying our environment. It's really not great for the animals. And, there's a lot of health risks as well.
And I guess one of the things, and sorry, I'm probably jumping
Yeah.
ahead on your presentation, like one of the big trends globally, as personal income rises, you start eating more meat. And as so much of the world's wealth is increasing, the developing nations are becoming wealthier. They just want more pork, chicken, beef on their plate. It's high density nutrition and tastes good and so forth. So that's kind of what's driving this huge expansion in animal cultivation and farming.
100%. Yeah, as sections of the world kind of come out of poverty, they want to eat more meat, and we need yeah we're gonna run out of space to produce all this protein.
All right.
Cool. So yeah, I touched on this earlier. So, the idea behind cellular agriculture is new ways of producing all these products that we love. And Cult has been investing in this space for the past 4 years. We've got 19 different portfolio companies across a really broad range of industries within cellular agriculture. So it's not just lab grown meat, it's enabling technologies, it's software, it's bioreactors, it's, chocolate production. And it's all these, basically, we invested in some of the most exciting companies in the space a few years back. And we're not the only ones, investing in this space. So VC money has been pouring into the space the past 5+ years. Bezos just announced another 60 million in 2 different projects. We've got sovereign wealth funds investing in the space. But at the same time, there's really only 3 public vehicles in the world to access these types of investments. So unless you're a VC or a fund, you really don't have access to these types of deals. In addition to that, some of the largest meat producers in the world are building out their own cultivated meat facilities because I think they see the same thing. They're going to run out of space and ways to produce these products, so they're looking to hedge and figure out how they can still create these high quality proteins, but in this new way. Cool. I think we already touched on these things. So, it's very different from plant-based. And money has been pouring into the space. As I mentioned before, we've been investing in this space for the past couple of years. And while we were doing this, we saw this really compelling opportunity in the pet food space. So we ended up acquiring an asset, which is our Noochies brand. So we own 90% of that company. It's based out of the States. And that's kind of a big focus of ours right now. So we've kind of have 2 parts of our business. So there's this venture arm where we have these 18 different portfolio companies. For the most part, I'm going to touch on those portfolio companies later, but it's a passive early stage investment. And then Noochies is this brand that we've acquired and are actively building in the space. I guess to start, why were we so interested in pet food? A couple different reasons. I heard the stat the other day, about 6% of global GDP is spent on people's pets. About 7% is spent on babies. So it's a huge industry. It's growing quickly. A lot of that growth is in the premium segment. People are spending more and more on their animals. And there's also some regulatory advantages when it comes to bringing products, to market that leverage these cellular agriculture technologies. So on the human side, you're looking, to bring a product to market, you're looking at 2 to 3 years just from a regulatory point of view. For pet, you can do that in as little as 6 months. Pet food also has a massive meat problem. So about 30% of our meat supply, our total meat supply, ends up in pet food. And usually it's not the nice, I guess, prime cuts or anything. It's kind of whatever's left over at the end gets shoved together and shipped out to the pet food manufacturers. And that's, low quality protein. There's, some disease risks in there, and it's not great. So our thought was, how do we go about, solving this problem, initially for pets? So this is Noochies is a brand we acquired, formerly called Because Animals. They'd raised about $10 million in VC money, incubated out of the Silicon Valley, developed some really interesting tech, and have this great line of products, a couple patents pending. And what it is in its current form is it is a high protein dog and cat treats that are very similar to meat in terms of taste, in terms of nutrition, protein benefits, etc., but don't contain any actual meat yet. So it's a cultivated nutritional yeast strain that's been developed and then freeze dried. So currently, we relaunched this brand, late last year, launched in the US online direct to consumer in about 50 independent pet retailers, just launched into Canada recently. And the nice thing about this is it's got this really strong margin profile, so 60% plus gross profit. My previous background was in food, where we're looking at 20 to 30% margins. So this really allows us to kind of continue to reinvest profits into growth and to really build and scale this brand. Just a quick look at some recent partnerships. For us, the current focus is let's build out this sales and distribution arm for Noochies. So we've got partnerships with a number of online retailers here. Pawmates here, this is essentially Tinder for dogs. So they've got 100,000 users in Canada and the US, and they're now seeing ads for Noochies in their feed, so they can meet up, share a bowl of Noochies. Pilot House is the performance marketing agency we're working with. They've worked with some great brands in the past. And the idea here is, we're not just going to spend a ton on advertising. Instead, we want to spend $1 initially and at least get $1 back. And then as we grow and scale and optimize, spend $1 and get $2 back. And then eventually spend $1 and get $3 back. And once we can build that model, we feel like we can really grow and scale this brand into something that's generating millions and millions of dollars a year. So the initial focus is on kind of building that distribution, setting it up for success, getting to 50 to 100K a month in revenue, getting that triple digit quarter over quarter growth. And that's what we're really excited about building with Noochies. Have been sending out tons of influencer sample packs and really trying to kind of grow an organic following and get people excited about these great products.
All right.
Any questions so far?
No, just keep going. This is good. I'm saving them up.
Sweet. Just a quick look at kind of some projections. I think these are fairly conservative. So my previous company, we were able to grow sales from 1 million to 3 million to 10 million over 3 years. This is doing something similar over a longer time period. I feel like that first million is always the hardest when you've got something new, you're trying to get traction, you're pushing that boulder up the hill, and then all of a sudden you hit on these winning models, these winning ad angles. Everything just seems to get easier once you have a bit of momentum and things are kind of really starting to turn nicely. And then you can say, okay, this is working. This makes sense. We've tested this out. Let's double down on it. Let's invest further. Let's really scale this business. Just a quick look at kind of the roadmap for Noochies. So as I mentioned before, currently 2 products in the market, dog treats and cat treats. Martin, I think you might have some dog treats there. You could potentially hold up for the camera. I didn't bring mine today.
Yeah. You sent me over a sample pack for our dog. Thank you. She loves them, so it's great.
Hey, there we go. But it's not just treats. So we've got 6 more SKUs we'll be launching within the next month and a half or so. Those are toppers / supplements. So that's actually the fastest growing part of the pet food market. Essentially, it's these sprinkles. You put it on top of your pet's food, and it gives them these different benefits like a joint boost, immunity, wellness. And for us, it's really build distribution, both online and offline, and launch more SKUs, into this distribution network. And then kind of what I'm most excited for is kind of phase 2 of Noochies. So phase 2 is let's take Noochies and let's put actual cultivated meat into the Noochies product and be potentially the first company in North America to do that. So we're currently in the middle of this FDA process for putting cultivated meat into pet foods. We've had all the initial consultations. We've developed these trials. And the next step for us is these feeding trials. So 26-week feeding trials, the animals are going to get fed this new Noochies product with cultivated meat in it. After that, there's some paperwork and we have our approval to sell in the US. That's for us, I think it's a huge catalyst. And it's something that we really think is important. So, a lot of companies in the cell egg space are still early stage. They're building out, they're developing their tech, they're starting to scale, but there's not a lot of products on the market, almost none. So we feel that by starting to bring products to market, starting to commercialize this technology, we can really help the industry as a whole and show that, there's a model here, we can do this profitably, and there's also consumer demand for these products.
All right. So currently these are made with Bimune, which is that your own like Bimune nutritional yeast? And maybe like nutritional yeast has been in human food and pet food for a long time. Bimune, is that your brand or your technology, or are you sort of buying that or licensing that from others?
Exactly. So that's our tech. So that's one of 3 ingredients that were developed by Noochies. And it's it's not just nutritional yeast. It's a special kind of proprietary blend and strain of nutritional yeast. We've added an active fermentation product to it, koji, and really it's been designed for optimal pet health. So to give them everything they need in terms of B12 vitamins, protein. It's got a complete amino acid profile for dogs. So it's much more than just nutritional yeast. And it's our kind of patent pending ingredient that we put into Noochies, and one of three. And for us, I can see, so we're currently using it in Noochies, but there's a huge opportunity to license this ingredient to other pet food companies as well.
Okay, and that is part of the Noochies IP, which you own 90% of. It's not directly of Cult. It's from that division.
Yeah, so we have a US entity called Further Foods, which we own 90% of, and that's essentially our pet food division. Noochies is a part of that company.
Okay, gotcha. So, and I'm fascinated by, so you will be, so nutritional yeast is not technically cellular meat or lab-grown meat, but you're going down that pathway. And could you just talk a little bit more about so obviously, as you indicated, it needs regulatory approval for it to be fed to people or to pets. And this is run through the FDA or the Department of Agriculture, or who manages these trials?
Yeah. So currently Nutri's doesn't have meat in it, doesn't have cultivated meat in it, but it is very similar to meat in terms of protein, B12 vitamins, etc. And yes, the next step is to add cultivated meat to the formulation and bring this kind of first to market product. It is overseen by the FDA. So we've been going back and forth with them, for quite a while now, designing the trial, kind of getting all ready to go through this, regulatory process.
Have any other, are you the first to go through this product, this testing assessment program, or are there any people who've done this before?
So we're the only ones that we're aware of that are currently in this process on the pet food side.
Okay.
There's two companies have successfully navigated this process on the human food side and have approval to
Yeah.
sell in the US. And the US is starting to roll out a framework as well for cultivated meat for human consumption.
Gotcha. And then that I guess will are there FDA rules on what you're allowed to call it? Do they have a like it's cultivated meat or what? How do they label it?
Yeah, there's still some ongoing discussion. Will likely end up being labeled cultivated meat. That is kind of the term that is becoming the de facto term for these types of products. Yeah.
Okay. And just to clarify, when do these trials start, and when do you hope or expect to get a response from the regulators?
Yeah, so we'll be announcing the start of the trial relatively soon. I don't have a 100% firm timeline I can share today. My goal is to have products launched this year
Okay.
in the US.
Gotcha. And you mentioned your 60% gross margins on these products. Is that an attribute of the cost of production, or just that you're able to charge like a premium price for the product? Can you give
Yeah.
some sort of clarification on your price points and manufacturing costs and that sort of a thing?
Yeah, absolutely. So that's a function of, a couple of things. So one is the cost of production. We've designed our supply chain to be very lean. So we're not building our own facility yet. We're using a co-manufacturer that produces the products for us. And then in pricing strategy is we're priced premium, but in line with other premium options on the market. So that's how we're able to hit those margins, which are, really healthy and allow us a lot of flexibility in the future, in terms of pricing, in terms of growth strategy. And for us, I think it puts us in a really good position. And that's where a lot of the growth right now is in the pet food market. It's kind of either in the premium segment because people want the best products for their pet, or it's
Yeah.
on the value segment because people are, feeling the pinch. It's that middle area which is being hit, really hard right now.
Okay. All right, that's great. Yeah, I think you're about to go on to your investment companies that you're involved with.
Yeah, happy to just give you guys a quick walkthrough here. As I said before, these are all early stage passive investments. In most cases, we're first check-in, third check-in. It's a pre-seed, seed stage investment. We're acquiring, 2 to 8% of the company. And it's not just, meat and dairy. So this company here, California Cultured, for example, is making cell-based chocolate. So currently about 85% of the world's chocolate supply is threatened because of deforestation, climate change, labor issues. So they're able to make their chocolate flavanols in the lab, and it's a better product, and it's actually cheaper than the conventionally produced chocolate right now. Cocoa futures have been skyrocketing. So they've got a partnership with the largest chocolate producer in Japan. And yeah, they're already commercializing their technology. They're scaling their business. So yeah, many of these companies, have gone up 3 or 4 or 5 times in value since our original investment. And we're really kind of excited to see them continue to grow. I want to keep supporting them and also leverage them, be their first customer potentially if there's an opportunity, and use their ingredients in our pet food products.
How is the environment for the venture capital, the funding environment for the cell-based or those in the ecosystem? Is there still a lot of venture capital for it? Is it drying up? Is it accelerating? Can you talk about that side of the funding world?
Yeah, I think it's been for the past 5 or 6 years, there's been a lot. So Good Meat here, one of our portfolio companies, has raised north of $500 million in VC money. I think it's definitely dried up a little bit over the past year or two, as it kind of has across the entire ecosystem. But there are another company just raised 40 million. I want to say a month ago. So there are signs of it kind of coming back a little bit. And a lot of these companies are thriving, are figuring out how to bring in revenue in the short term and kind of commercialize their technology.
All right. And are you going to be doing ongoing investments, or are you happy with where your portfolio is and you'd rather spend new capital on developing your own brands and products?
Yeah, so right now we're happy with the portfolio. We think it's great, it's diversified. For us, we see the most value in investing in our brands and companies. That isn't to say we'll never make another investment again. If there's a good opportunity, absolutely evaluate it. I can also see us making investments where it makes sense, like if we need an ingredient or see some kind of strategic partnership. So I think it would have to make sense on a couple of levels for us to make further investments.
Gotcha. All right.
Well, this is, yeah, just what we were talking about. And maybe I'll just give you a little bit of background on the regulatory environment for cultivated meat for human consumption, if that works.
That'd be great.
Cool. So Singapore, led the way. One of our portfolio companies, Good Meat, is approved for sale in Singapore. They recently started selling in a grocery store there. Another company, Upside Foods, is also approved for sale in Singapore. US has started granting approvals and rolling out a framework. And I really think, one of the biggest limiting factors so far has been price. So 10 years ago, the first lab-grown meat burger cost about $400,000. Now that same company is making that same burger for about $20 a burger. So it's come a long way. It's not quite yet there, but very soon you're going to have the same product. It looks the same, it tastes the same, it is the same, and it's priced similarly as well. I think at that point is when it becomes super compelling and interesting.
Yes.
Well, just a quick look at the company. So myself, prior to this, I co-founded a company called The Very Good Butchers, took them public as The Very Good Food Company, grew sales from 1 million to 3 million to 10 million. For me, really passionate about building better for you consumer brands that are working to make a meaningful difference in our food system. Sarah Dodd is our scientific advisor, also our vet nutritionist. So she did, all of the formulation on Noochies. She'll be assisting with these feeding trials, really keen understanding of animal health, animal nutrition, what pets need to thrive and be successful. Mark Binns recently joined us as our capital markets advisor, great network, also a builder. So he built big digital assets. Russell Starr recently joined as a strategic advisor. You may recognize him from DeFi Technologies. And I think the big thing is, both these guys are pet lovers. So I think that's one of the reasons they were attracted to the deal. They've got animals, they love what we're building here, and they really see the kind of the future. They see that, things are really going to change over the next 10, 20 years. And Cult's in a really good position to be kind of one of the companies leading that change.
Oh, it's funny. Just like you have a vegan pet food, and my family's a big fan of F1 racing, and Lewis Hamilton has a vegan dog. And when
Yes,
I
yeah.
first heard that, it's like that's ridiculous. But that's the response the first time you hear it, and it's a growing trend, and people want to, for whatever reasons, ethical or whatever, want to go down that route, and there's I don't know. It seems like there's going to be clearly growing demand for that.
Yeah, absolutely. We gotta send Lewis some Noochies. Maybe we'll get a Noochies wrap on his car one of these days.
Yeah. All right.
Cool. So,
Okay.
do you want to jump
Sorry,
into?
continue with the cap. I was about to ask you about the cap table.
Yeah,
So there you go.
almost wrapped up here. So yeah, 70 million shares outstanding. Stock was rolled back 4 to 1. I want to say close to a year ago, maybe 8 months ago. So really clean structure. Did a financing a month and a half or so ago at 5 cents a share with warrants at 6 cents. Raised about 800,000. And since then, I've really been investing in the Nucci's business and scaling the brand. We've got, warrant coverage all the way up to $1. So at 6 cents, at 20 cents, at 40 cents, at 80 cents. So for us, really see an opportunity to keep building the business. And then as we go, if we exercise all those warrants, we're going to bring another 7 million in cash into the company. So which can obviously be used to keep growing. Do have a financing open right now, 25 cents a share, warrant at 35 cents. And yeah, I mean, for us, my big focus is how do we go from being a company that has all these investments, kind of passive investments, to one that is kind of actively building in the space, kind of that venture studio model, and is starting to bring in, meaningful revenue. Any questions on this slide, Martin?
Um, no, I think that's good. So sorry, and just to repeat, how much are the raise? Are you planning on raising at this point?
Yeah, looking to raise up to 2.5. I
Okay.
think a big chunk of that is already taken. Yeah.
And then that gives you how much of a runway to grow the business? Obviously, a lot of it's towards marketing, right? I presume, and building that business. So that's very controllable how you want to spend that.
It is. So for us, the focus is let's keep kind of overhead core team. Let's keep that low as we build and scale out the business. And then as revenues increase, we can add headcounts. In the meantime, support those efforts with agencies, other partners we can bring in, but always have control over burn and profitability.
Gotcha. Gotcha. All right. And what can you like you're growing, what is your burn roughly right now? What kind of runway these funds give you?
Yeah, so burn's currently around, the 30 to 40K mark per month. And
Okay.
obviously so yeah, it gives us, a ton of runway. I
Yeah.
think our focus is going to be on growth though, because we see a real opportunity to grow the business, in the short term.
Yeah, yeah. And I guess with Nucci's, you owning 90% of it, I guess it's largely a virtual organization. They don't have manufacturing facilities. You got co-packers doing that, and they design the product and then get others to manufacture and package it and so forth.
So as I mentioned before, the way it designed was to be very lean. So Nucci's has the IP, they've got the line of products, but we've got co-packers in place to one, produce the ingredients for us, so the Beamune nutritional yeast blend, and then another co-packer to produce the finished products for it. So put it into the dog treats, the supplements, etc.
Gotcha. And so your focus right now is very much on the pet space. Where does the human space come in? Is that going to be a near-term thing, or are you going to sort of really build out your pet food platform, get that really working, and then shift over to the human side after?
Yeah, so as I mentioned, focuses on the pet food space. One of the big reasons for this is I think consumers are more open to cultivated meat for pets. It's also more economical. So to produce like a fully structured steak or piece of sashimi or something is expensive and it takes longer. Whereas for pet food, we can harvest the cells earlier. So we still get all the nutritional benefits, but we're not having to build that fully structured product. So as a result, we're going to be launching these products, containing cultivated meat and pet food, and they're going to be profitable from day one. And so that lets us kind of build and scale there. So that's why we're focused on pet initially. Would love to get into human food at some point. At this point, it's probably a couple years down the line.
All right. Okay. We have a lot of questions from the audience here, so I will start with here. I'm going to rephrase some of them, and this sort of dovetails into a news release you put out this morning addressed to I guess, the government of Florida, which
Yeah.
I don't know if they have passed or they're threatening to pass legislation to ban cellular lab-grown meat, and your letter of sort of objecting to that and why it is beneficial. So could you just talk about that regulatory? And it's not just regulatory, it's political. Somehow it's fallen into the right-left spectrum of politics. It seems. So could you talk about that political side of the regulatory environment and your letter today in that whole environment?
Yeah, absolutely. So yeah, so Florida has, and I think Alabama as well, has banned this, like the sale, the transport of cultivated meat in their states. And honestly, I think it's not a bad thing. It's kind of great. It gets people talking. It means that, big meat is feels threatened. So I think there's been pressure from the kind of the cattlemen's lobby associations put on these governors, and they've gone out and banned it. I think, yeah, I think it's, misinformed. I think it'll get overturned eventually because, at the federal level, you have the government working with companies, rolling out this regulatory framework for cultivated meat, wanting to build that environment in that space. And then you have a couple states that are saying, no, no, not in our state. So I think it's interesting. I think it's going to evolve over the coming years. But it does seem kind of crazy. They're all for free speech and choice and all this stuff, and then they're trying to regulate what people eat.
All right. Yeah. And I would think as demand grows and supplies grows, it's going to be harder to say, no, you're not allowed to eat this. I'm your mother and going to tell you what safe products you can and can't eat. That's kind of
Yeah.
ridiculous.
And I think so right now the problem isn't demand for the products, it's production capacity, it's scale. So companies
Yeah.
are, big bioreactors are expensive. The technology is still new, it's being improved, it's being developed. But I think, yeah, over time there's going to be a lot, more demand, and it's going to be hard to say no. I mean, it kind of reminds me of the prohibition days, right?
Yeah. Yeah. All right. Questions from the audience. Someone asking, I won't read out the whole question, but paraphrase it here. How is the launch going? Is it sort of in full swing? Or is it sort of in startup mode and until you close the financing and you can really give it a push? Just talk about where you are right now and where you expect it to go in the coming quarters.
Yeah. So for Noochies, or I'm assuming.
Yes, for Noochies, yeah.
Yeah, so there's a couple pieces. So for online, it's going well. So everything has been, we've got the products, two products in market. We're set up on the third-party marketplaces. We're running ads with Pilot House, but it takes time. We can't just go from, zero or almost zero to, 50K a month overnight. So there's this process where you're creating new ads, you're testing audiences, you're optimizing, you're scaling. And then once you have those numbers that make sense, okay, we're spending $1, we're getting $2 back. At that point, you start scaling and growing the business. So I think it's going to take a couple of months to really start generating that meaningful scale. But so far, I'm really happy with where things are at. Looking forward to launching more SKUs because that's another big thing. It's hard to make this online advertising model work if you're selling a $10 bag of dog or cat treats. You really need to get a larger basket of products, get a bundle pack, get some supplements in there, get that average order value to like $50 to $80. And at that point, you can really make the online model work. On On the kind of retailer side, it's going well. It takes time. I mean, you present to a big retailer, they say they love the product, they want to put it in their store. It takes about 6 months to a year until you actually end up on shelf. Yeah, overall, I'm happy with how things are going, and looking forward to really starting to scale as we get that initial data and feedback and learnings in, saying, okay, this is the right positioning, this is the right angle, things are working, let's double down on this. Right now, it's very much in the let's try a bunch of things, let's see what works, and let's double down on those things.
All right. A question here on your patents and your patent portfolio. I guess you have several in the application process. How are they standing and with your applications?
Yeah, so we have two patents pending. Both cover it's the freeze drying of nutritional yeast for animal treats and for animal food. They're moving through the patent process. We don't foresee any issues. We expect them to be granted. We recently filed this applications to expand that protection to 150 different countries. So yeah, overall, it's moving well, and we don't foresee any issues with getting granted these patents.
All right. Not a question here, but somebody says they bought the Noochies for their dog and the dog loves them. So
There
there
we
you
go.
go.
I would
All
say
right.
we're at about so with a lot of plant-based dog foods, see like a 50-50 rate on whether the dog likes it or not. I haven't met a dog that doesn't like Noochies, so I'm going to say it's like a 95% success rate. I'd say
Okay.
cats are a little bit pickier. Cats probably 80 to 85% success rate from what I've seen.
Okay. All right. You say you're going back and forth with the FDA on the approval for the pet food, and it's a 6-month process. Does that mean you are at least 6 months away from any from launching any of these products? Just clarify the timeline.
Yeah, I'd say maybe a little bit less. So where we're at is the next step is these, I want to say the 22-week feeding trials. Once those are completed and the data comes back, it should move relatively quickly. So once that data comes back within, I think a month or two, we should have our approval. And then it's a matter of figuring out, okay, what's the launch plan? Can we get enough of this cultivated meat ingredient to launch and bring this to North America?
All right. Can you elaborate on how the bioreactor process works? When I think of lab-grown meat, I imagine a piece of steak on a petri dish. How is the bioreactor different, and explain how this is different and how it works?
Yeah. Not a science guy, but can give you a kind of my understanding at a very high level. And initially it starts, yeah, in smaller, maybe it starts in a petri dish. But once it gets scaled up a little bit, it goes into that bioreactor. You'll put the biopsy or the little DNA sample in there. Really depends on the company and their process. If they're just making ground meat, it might be different from if they're trying to do a steak. But you'll often have some sort of scaffolding, usually edible, which the sample gets attached to. There's nutrients that are in the tank, and then basically over a period of 3 weeks, it grows, and it grows into that piece of meat that you want to eat. There's a bunch of science that goes on too in terms of what the cells are being fed, fat cells, protein cells, how they're growing on that scaffolding, like if you're aiming for a piece of steak. And then, at the end of this 3 weeks or a month, you can harvest the cells and have your meat.
All right. Could you discuss the synergies that exist between all the investments and how you plan to utilize those synergies, I guess, buying their products or licensing IP or something, and how that fits into your strategy?
Yeah, absolutely. So as I mentioned before, Noochies wants to launch cultivated meat in pet food. And a lot of our portfolio companies are currently working on cultivated meat solutions. One of our companies, Umami Bioworks, we're working on a cultivated snapper. It would make a great ingredient for a cat food treat. So that's, I think, how we see the initial synergy working is let's be their first customer. Let's help them commercialize their tech. And because we have that existing relationship, we were an early investor, it makes that kind of relationship easier. And then kind of how else can we support their business and actually start commercializing and bringing products to market?
All right. Uh, is there, given that lab-grown meat is still early stage, is there any information on the side-by-side comparison comparison of the environmental impact of lab-grown meat versus farmed meat? Is that
There
there
is.
info on
Yeah,
that?
there absolutely is. I don't have that info in front of me. I know, it uses considerably less water, something like 90% less water. Obviously uses less land. There's no methane being emitted. So, the companies like our portfolio company, Good Meat and Upside Foods, have commissioned studies, I believe. Yeah.
Okay. And I would think, like anything, as it develops, it'll get more efficient and there'll be just more processes involved. I would guess it's not at scale right now, so it's kind of hard to compare something not at sort of the
Yeah.
growth stage versus an industry that is at scale. So,
100%.
yeah. Um, what are the costs associated with bringing the next lab-grown meat containing products online in terms of manufacturing expenses, FDA trials, etc.? Is it expensive to get the approval process done?
Yeah. So for us, on the pet food side, we're looking at about 100,000. So not too bad.
Okay.
That includes the feeding.
That's a lot less than a FDA drug trial for
Yeah.
any drugs going on the market.
I know it is considerably more expensive on the human side.
Yeah.
Again, one of the reasons we're focusing on pet. So yeah, so it's manageable, and I think in terms of manufacturing, we're gonna initially, to a certain extent, we'll be relying on our partners to purchase this ingredient. But
Yeah.
they're all in the process of scaling, and we're convinced that we'll be able to get the ingredients at a cost that makes kind of economical sense, so we can bring those products to market, have them be profitable from day one, and really kind of build and scale.
Gotcha. And finally, a question here from, I guess, a potential investor. Sounds like out of the US, how they could buy the stock. You are listed on the OTC in the US?
Yeah, so ticker there is CULTF. It's on the OTCQB. It's DTC eligible, so you can, yeah, purchase it no problem. And then we're on the Frankfurt Exchange as well as the Canadian one.
All right. How is your, like, in terms of marketing the stock? Obviously, we're communicating with the market here right now. I haven't looked at the trading volumes in Frankfurt on the OTC. How is it mostly a Canadian traded story right now, or what's your breadth?
Yeah, I think Canadian is where the bulk of the volume is. We've been trading well. We were trading a million plus shares a day, last week or so. Decent volume out of the US as well. I was in New York all of last week telling the story, getting people excited. But it started as a Canadian pubco story and is really just growing from there. So really just starting to tap into that US audience, and are planning on, continuing to build that relationship over the coming months.
All right. And in terms of news flow over the let's say the remainder of the year, what kinds of news should investors be keeping their eyes out for? I guess updates on the marketing launch and on the FDA trials, or just give us what should we be keeping our eyes
Yeah.
open for?
Yeah, so this is kind of a few different catalysts here. I think the big thing for us is navigating this FDA process. So, getting into feeding trials, getting that regulatory approval. I think that's going to be huge for us. The other thing is Noochies sales growth. So when are we generating that meaningful revenue, getting that 50 to 100K, a month in sales? And we'll be sharing updates as things progress there. And last but not least is just the portfolio itself. I think a lot of these companies are going to do really well in the future. So any liquidity events there, either, acquisition, going public, et cetera, would be something to keep an eye on as well.
All right. There is, in a limited sense, there is often a secondary market for private venture capital deals. Under what circumstance would you explore maybe selling off some of your investments, sort of to reduce that portfolio, compared to issuing new stock and that to generate funds to grow the company?
Yeah, so 100% open to that. I think it would have to make sense, from a deal and price perspective, obviously. And we'd want to make sure that there's no other strategic relationship there, right? We don't want to be selling off our ingredient suppliers, for example. But yeah, definitely open to it and using that as a way to fund the ongoing growth of the company where it makes sense.
All right. Well, it's time we wrap things up here. Mitchell, so any final thoughts or comments before we wrap it up?
Nothing major. I think, this is going to be the future of food over the long term. We need a new solution to produce all these products that we love. It's still early days in the industry. There's going to be ups and downs over the coming years. There's going to be new technologies. There's going to be new ways of producing these products. But the need is there. The smart money, quote unquote, has been cycling into the space for years. And we're uniquely positioned as, one of three publicly traded companies in the world to capitalize on this future of food. So I think it's a really exciting time, and I'm really excited to be a part of Cult and to be at the forefront of all these, cool new technologies.
All right, excellent. Mitchell, thank you very much for taking the time to bring us up to speed on Cult. I'm looking forward to getting you back and getting updates as the business progresses. Thank you very much.
Thanks so much, Martin. Have a good one.
You too. Cheers.